Welcome back to The Price of Business. I'm your host, Kevin Price. You know that music. That means he's here. Bob Loeser, Taxman Bob. We officially call him here on The Price of Business. Does a fabulous job talking about what's happening, not only in the tax front, but in the whole business front. He's got great business acumen, and we always enjoy his presence here on the program. How are you, sir?
This segment is sponsored by the Beatles.
There you go.
I am doing great, thank you. Happy New Year to you.
Happy New Year to you, too. Yeah, you said you were sick during the holidays. So there's nothing like being sick to make you feel really good when you're no longer sick.
That's right.
You know,
that's, right.
That's the one upside to not feeling good.
And what's at least interesting for me, knock on wood, and I'm blessed by this, not going off on a religious tangent, but I never get sick. I mean, I haven't been sick in 3 years. And so to be sick, you kick yourself because you say, not only is it the holidays, you don't want to be sick, but why do I have to be sick now?
Exactly.
Okay. So it happened.
It happened, but you made it, and you're obviously feeling pretty chipper now, as they say. So now here we are. We're already in the first. It's hard to believe. You and I are going to be in shock and awe throughout the year, going, "What? We're already in the end of the first quarter." You know how we are.
Yeah.
So, but we're already in the first of the year. I'm still trying to remember 2014 when I write checks. But what should business people be thinking about right now?
Well, I mean, first off, of course, our dear government, it's like second verse, same as the first. I mean, you're not going to get help from the government as an individual business owner. So stay close to the vest, prepare, excuse me, plan your year. Things like if you really need to go to the bank to expand warehouse or buy new equipment or add personnel, do it now, because money is going to be more expensive as we go later and later into the year. Now, more expensive to some, they say, well, so what? But the difference between maybe 5% on rate of return for the bank, 7.5%.
Wow.
Is what? That's a 50% increase.
Yeah, it is.
And budget that where your payment was $1,500 and now it's $2,250 because of the increase in interest in maybe 6 months. You got to look at it seriously. The second thing is, if you were planning on buying new business equipment, 2012, the IRS for several years had Section 179 election, which for the most part you could buy up to, I think it was $500,000 worth of equipment and expense it all in the first year. Now, I don't advise that for all people, because you take the expense up front, and if you're paying it off over a note obligation in years 2, 3, 4, and 5, you're paying the cash out of your bank account, but you're getting no deduction for it.
Right. So you might want your tax relief to accompany your payments.
So it's a timing issue. Now, does that mean you have to not take take it over 5 years? No. You can modify it, take some of it up front and the rest of it over 5 years, so that you get some benefit up front, but you get benefits in years two through 5 to also benefit you. But now what's happened is, last year they cut it significantly to $125,000, and now, unless we go to our senators and congressmen, yes, those fools in Washington,
go to them. What are you, crazy?
It's been reduced to $25,000.
Wow!
So you're talking about a truck, a new piece of equipment for your printing press or whatever, and you're done. You can't deduct the $179 any longer. Now, again, could they make it retroactive? Yes. But my response right now is, there's no incentive for people to go out and buy new equipment to add or expand their business, because I'm not going to get a big tax break from it any longer.
Other than the artificially low interest rate.
Correct.
Yeah.
Correct.
All right, that's a good thing to think about. Of course, something else that immediately comes to mind is that for the business owner, the tax issue never goes away. I mean, everyone talks about April, and they talk about October and August,
right,
but it really never goes away because of the sundry of tax issues out there. What are people thinking about when it comes to taxes this early in the year? I
know the things that we talked about for planning purposes in December that drags into January. If your business is, let's say, a proprietorship or a one-man LLC right now, where for the most part you're reflecting that income on a Schedule C business form on your personal tax return, it might be very appropriate for you to evaluate your situation. If income and profits are up, maybe look at switching to just a regular C Corp, or where I highly tout, an S Corporation, where the income goes into the Corp. It goes out in two types of sources. One, a salary, which has to be reasonable by IRS standards, and then two, a dividend from an S Corp, which means it's a distribution that isn't subject to Social Security tax or Medicare tax, but it is subject to income tax.
Yeah.
Give you an example. If your profitability, let's say, is $150,000, under an LLC or a regular proprietorship, you're paying Social Security and Medicare on all of the $150,000.
Okay.
If you go to an S corp and elect, and if you call us, we can, through the two attorneys that we use, two different firms, can incorporate you in less than 72 hours.
Wow.
So Monday, you're incorporated, you go down to your bank, you open up the bank account, and you're ready to go. If you do an S corp and you're making 150, you could take like 90,000 in salary, which is reasonable compensation. Take the other 60, not subject to Social Security and Medicare, and right there, let's say that saves you $4,500. Mm-hmm. Okay, that in itself, the savings that you don't have to pay Uncle Sam, that if we're truthful about this, you will never see that Social Security or those benefits when you retire anyways. Okay, then why pay it? That $4,500 is the first $4,500 towards, let's say, your IRA this year.
There you go.
So you're using Social Security dollars that you'll never see, and you never get a thank you card in the mail from you-know-who yearly.
Yeah.
And you can start funding your retirement plan, whether it's a IRA, a SEP, a 401k, etc.
Wow,
it's
that's
a great
fantastic
planning tool.
Yeah. Is that relatively new, or how does that come?
No. It's just a lot of times, and talking with a couple of new clients, they said, well, this is sort of short notice for me. And I said, it's never short notice. You should always be thinking about it. And then when I got done with the meeting, it sort of turned on that light bulb, saying, well, why am I only talking about this in October, November, and December with clients? That if it's appropriate, even though they didn't get that opportunity by December 31st to incorporate or change the structure of their entity, it's a good time to do it now.
Mm-hmm. Mm-hmm. Is there a certain type of corporation they have to be, or just incorporated?
Now, in the state of Texas, first off, you incorporate. That incorporation for federal purposes is established as what they call a C corporation.
C corp.
Right. Now, in a C corporation, like ExxonMobil's and the Fords, et cetera, you can't take out monies for yourself except for salary unless you do want to take a dividend, which then it's double taxed. For example, when you get your 10 shares of Ford and they give you a $1 dividend a year and you get the $10 check, to Ford, that isn't deductible. They pay income taxes on it. When you get that $10, you pay income taxes on it. So it's a double taxation.
Wow.
So you go one step further with the C corp.
I don't even like a single tax.
Right. You go to an S corp.
Yeah.
That S corp prevents the double taxation on the dividends.
How does the LLC play in that?
Well, the LLC, you can be an LLC if you're a one member. It's what they call a disregarded entity, which means you're not really a corporation. You're just a proprietorship. If you have a partner, okay, then you can be an LLC partnership, you can be an LLC C Corp, or you can elect to go LLC S Corporation.
Mm-hmm.
Right? But the biggest factor a lot of times for LLCs is that they say, well, I established an LLC. And you say, well, who are the partners? And they say, just me. And I said, then you really don't have an entity for tax purposes.
Right.
Okay? Is that what you want? Well, no, I wasn't explained that.
Yeah.
Okay. Now, yes, you can add wife on there. You can add, if you had a business partner, etc., for the LLC. But that's another discussion face to face and individually that one must make moving forward.
Yes. Bob Loeser, Taxman Bob, we call him around here. Taxmanbob at pdq.net. That's taxmanbob at pdq.net. Let me ask you here with the little time we have left. We're a little time left. With 2013 behind us, anything people can do right now to mitigate anything they probably should have done in 2013 tax-wise?
If they've got good advisors, and let's say we're looking to put into a 401k or a profit-sharing plan, there are entities out there that, I'm going to use the term, it's only the 7th, 8th, and 8th, 9th of the month here, backdate a plan. I can't do it in April or May. I mean, nobody's going to sign a document and go, yeah, we'll backdate it 4 months.
Right.
But backdating it a week or saying it was literally lost on your desk and you didn't sign it until then would be fine. But that could be a difference of setting up a plan and contributing $30,000 at a 30% tax rate saves you $9,000. Or if you got multiple employees that you want to benefit and you want to put $70,000 in at 30%, that saves you $21,000. Those are the types of things that we can talk about immediately.
Yeah. But you're playing beat the clock.
You're playing beat the clock. Yes.
What's your number?
713-953-1272.
One more time.
713-953-1272.
Taxman Bob at pdq.net. I'm Kevin Price, and you're listening to The Price of Business.
It will be. There's one for you, 19 for me. 'cause I'm the tax man.